Today I want to share a story that could have easily cost me $600,000 on a new construction deal, and more importantly, the lessons that can save you from making the exact same mistake. Whether you're a beginner real estate investor, a business owner, or someone simply trying to build long-term wealth, this is one of those situations that can change the way you look at money forever. So let me take you back to the beginning. I was analyzing a new construction opportunity in a growing neighborhood. On paper, it looked perfect. The numbers matched the comps, demand was high, interest rates were stabilizing, and the builder had a solid track record. Everything sounded like a dream deal. But here's the thing. Real estate will always reward you when you slow down and punish you when you rush. And I'll be honest, at that time I was excited. The builder was offering upgrades, the market looked hot, and everyone in the area kept saying, "Buy now before it's gone." That pressure alone makes many investors overpay, and I almost fell for it. The contract price was $600,000. Not cheap, but I convinced myself that because the area was appreciating fast, it was worth jumping in quickly. That's when the first red flag showed up. The builder wanted a large, non-refundable deposit, much higher than what's normally required. If anything went wrong, I'd lose it instantly. Builders sometimes use that strategy when they know they're pricing the property too aggressively. And I felt it. Something in my gut said, slow down. So I did what every smart investor should do. I went back to the numbers. But this time I dug deeper. I looked beyond the comps and went straight to the actual sold prices of similar new builds that had closed within the last 90 days. And you know what I found? The builder's price was inflated by nearly 15%. That alone was a huge eye-opener. But it didn't stop there. I decided to run a full inspection, even though it was new construction. Most people skip that step, big mistake. The inspector found several structural issues: misaligned framing, poor drainage grading, and questionable roofing quality. These aren't small cosmetic fixes. These are the kinds of problems that become extremely expensive years later. The builder tried to reassure me, "We'll fix everything." But here's the truth most people don't realize. If a builder is cutting corners during the early phase, they will cut corners throughout the entire project. Once trust is gone, the deal is gone. To make things worse, I reviewed the neighborhood development plan. The city had approved a major road expansion right behind the community. That meant three things: more traffic noise, lower long-term value, and potential difficulty selling the property later. None of that was mentioned by the builder. But once again, when you depend on the seller for information, you're already in trouble. At this point, it became very clear. I wasn't buying an investment. I was buying a liability wrapped in a shiny brochure. And if I had moved forward, I would have locked myself into a property that was overpriced, poorly built, and sitting in a declining micro-location. That is how investors lose hundreds of thousands. So I walked away, and that decision saved me $600,000. But here's the real takeaway. Your biggest losses don't happen the day you sign the contract. They happen when you ignore the details because you're excited, pressured, or afraid of missing out. Wealthy investors are wealthy for one reason. They verify everything. They don't rely on emotion, hype, or someone else's timeline. They rely on data, inspections, zoning research, market trends, and patience. And this applies to everything in business and finance, not just real estate. Whether you're buying property, investing in a business, or even making a partnership decision, and slow down. Analyze and protect your downside first. That's how you stay in the game long enough to actually win. If you've watched this far, here's your action step. Before making any financial move, ask yourself, what is the worst-case scenario? If that scenario could damage your long-term financial health, you walk away, no matter how attractive the deal looks. Your wealth is built by what you avoid just as much as by what you invest in. If you found this helpful, make sure to hit that like button and subscribe to Smart Realty Secrets. Every week, I break down strategies to help you build wealth, protect your money, and make smarter decisions in real estate and business. Join the community and let's grow your financial future together.